Our old buddy Cony. Retiring people since, well, I'm not sure if they've ever actually helped anybody retire just yet. It's only been around since August of 2023, so it's brand spanking new, but it's had quite an impressive run since then. The stock is up 32% since, and the stock has paid some super juicy monthly dividends in its short lifespan. Cony is on pace for a 117% dividend yield. That's right, $100,000 investment in Cony would turn into $217,000 in just 1 year. So all you YieldMax lovers and fanboys watching this video, was I wrong about Cony? Is it time to sell all my stocks and go all in on the magical Cony? I wouldn't count on it just yet. In fact, I'd say Cony's success just highlights the absolute best of this type of ETF investment strategy. It's really firing on all cylinders. Let me explain. For this to happen, the underlying stock, which is Coinbase has a beta of 3.06. A beta of 3.06 indicates on average the stock moves 3.06 times as much as the market on any given day. Generally, a beta less than 1 indicates low volatility, and just above 1 indicates higher volatility than the overall market. So this is 3 times that. This means this is a super volatile company, and this makes a huge difference because part of the Cony fund strategy is doing covered calls. The more volatile a stock is, the juicier those premium payments are going to be. And the fatter those dividends that Cony sends out each month are going to be as well. Investors love to do options trading with stocks with higher implied volatility. Of course, that means it comes with a huge degree of risk as well. There has to be a trade-off somewhere, whether that's fluctuating options premiums by the day, big price swings, market sentiment quickly changing, liquidity concerns, trying to time the market. One really needs to address their risk tolerance with these type of ETFs. YieldMax's own website even clearly says that investing in these types of funds involves a high degree of risk. In big, bold letters. So all of you who love to leave me comments like,
"These funds are super safe and everyone should put 100% of their portfolio into them,"
why don't you actually try reading something other than the Reddit forums? Another big reason for the success of Cony this year is that Coinbase, the stock, has done amazing in 2023. And that might be an understatement. We all know how well Nvidia did in 2023 with not too bad of a 250% return. Coinbase has delivered a 356% return this year. That is exceptionally high. I'm talking extraordinary, one that you don't see very often. Of course, Coinbase has done so well this year because crypto appears to be back for the time being. The more people talk about crypto, the more valuable an exchange like Coinbase becomes. Bitcoin is up 158% this year alone. Crypto, of course, is extremely unpredictable. Check out the video I recently made on how high I think Bitcoin will go in 2024. In that video, I do warn that crypto is still in its speculative phases. The vast majority of people buy crypto not to use as the means of exchange like it was actually intended to be, but to resell it at a later price for a higher price to a greater fool. Think about it. People don't go into a grocery store and buy loaves of shelves with Bitcoin. That just doesn't happen today. With the Fed expected to cut interest rates next year, borrowing costs become cheaper and people start to invest in more speculative assets such as crypto. So this gravy train, it might actually continue for Cony. You might be able to gobble up more gains and big dividends, but this might already be priced into today's prices. The market has responded very optimistically in recent weeks to Uncle Jerome's decisions. You might notice next to your favorite companies, there's this thing called PE ratio. For MasterCard, the PE ratio is 37. For Lowe's, the PE ratio is 17. And for Coinbase, Coinbase doesn't have a PE ratio. A company not having a PE ratio indicates a company with negative earnings, as they don't currently make a profit. In fact, last year, Coinbase lost nearly $3 billion. You can't divide by zero. ChatGPT says so. This is typically seen in newer companies like Coinbase. They're still heavily reinvesting any profits back into their business. But this means investors are putting a lot of faith in a company that currently sets money on fire. As we've seen before, investors' expectations get ridiculous. Stocks often become overvalued, and a huge bubble will form. And once that bubble pops, what comes up must come down. And remember, due to the options trading that Cony does, they're going to experience only some of the upside that Coinbase, the stock, experiences, but all of the downside risk. Stocks can fall very quickly when that euphoria wears off. We've already seen some of this stunting occur since Cony's inception. The ETF is up a juicy 182%, but Coinbase is up a mouth-watering 274% since then. That's with dividends reinvested, so none of that just reinvest the dividends bra talk. Keep in mind the fund managers charge nearly a 1% expense ratio to do all the work for us, and dividends, they also have tax implications. So bravo, Cony. You have done very well so far. The game conditions were in your favor and you took full advantage. However, I still see funds like Cony as a ticking time bomb. The longer one holds this fund, the more they buy at the top, the bigger that eventual implosion is going to be. And it's going to be a huge one. You live by the volatility, you die by the volatility. Stocks that make no money are not going to keep infinitely going up, even if we have an infinite money printer. Coinbase went up almost 400% this year. That's probably not going to happen in 2024. This run up that Cony has, it's probably going to be the exception rather than the norm, but only time will tell. I have a hard time believing a 117% dividend yield is sustainable. Cony lovers, please tell me how much of an idiot I am. Tell me how wrong I am in the comments below. Try to keep it somewhat civil. Even better, cuss me out in the dividend Discord below. My full $165,000 portfolio is in the link below. See every position I own and the weekly stocks I highlight. On the Patreon, one of my recent stock highlights went up 17% the day after I highlighted it. My videos are always found in podcast form under the Collect Cash podcast name. Check out this video on where Bitcoin is going next year, and I'll catch you on the next one.